Good morning, ladies and gentlemen, and welcome to the Q418 results earnings call of Thermax. With us today from the management, we have Mr. M.S. Krishnan, Managing Director and CEO, and Mr. Amitava Mukhopadhyay, Executive VP and CFO. As always, we shall begin with the opening remarks from Mr. Krishnan and then open the floor for a Q&A. Over to you, sir.
Thank you, Ankur. Good morning, my dear friends. A quarter where I'm sure there was a lot more expected from Thermax, where the numbers are already in the market. Some good happenings and something which didn't go exactly as what we planned of. So let me start on with the good thing. The order intake for the fourth quarter also had been 37% better in comparison to 1170, going up to 1599, that is 1600 order booking, taking the overall order intake for the group for full year to 6,380 versus 4,394, an improvement of 45%, and almost similar to an all-time high order intake for a year in the recent past to talk about. For the quarter, the revenues were lower. At the group level, in comparison to last year's 1,482, we are lower by 4% at 1,417. And including other income also, it is lower by 4% at 1,488 versus 1,549. With this, the sales revenue number for the full year is 4,493 versus last year was 4,493 versus the current year, a minus 2% for the full year at 4,391 at the group level. Even after accounting for other income and other operating income, it has come down from 4,704 to 4,602. The quarter four reduction, which we had certainly targeted a little higher number, there were two specific reasons. Number one being some of the projects where things are happening at a faster pace, in some consideration related to the e-way bill introduction, we were unable to push it in the last moment because the suppliers were not ready for it since we were not given a clearance for it. That could have had an impact on near to 100 crore and our own inability to push things in that particular month for various reasons could have been another 100. So we could have certainly been at 200 crore more than what you would have seen for the quarter number. But most of that has already happened in the current quarter, in the last 45 days itself. At the profit level, for the quarter, in comparison to the last year of 12% PBT, it is 100 basis points lower at 11%. That's at Thermax group level. However, for the Thermax standalone, which may not be known to you, I don't know whether it's reported separately, our PBT has gone up from 12.4% to 13.1% for the quarter for Thermax standalone. And for the full year, the PBT has come down from 10.1% to 9.6%. If only we had had the top line improvement, as I mentioned about, it would have been certainly closer to or touching a 10%. Now, what are the reasons for the reduction in profits for the quarter, which would have also reflected into the financial year? First and foremost, the revenue reduction. Second is related to the overseas subsidiaries. Starting the Danstoker Group had a negative than what we expected for the quarter. In the China subsidiary of the company, we've had 4 specific litigations ongoing where we've taken a prudent decision to keep a provision. These are, how do I put across? Post certain relationship failure between two of the countries, there had been an increased level of litigation which has now come to a standstill. And the way things operate over there is that you might get an ex parte order which you're going to be challenging later. So we thought, knowing the way things are happening currently, it may be better to make a provision for it. And we also had to be booking the negative related to the operating expenses of Indonesian subsidiary, which should be improving in the current quarter onwards. This is the second item. Our environmental business, water has certainly turned from a low profitability to a decent enough medium level profitability. However, the air pollution control on the back of the steel price increase, that's only division of Thermax which normally takes the brunt of conventional steel price increase, and they have had reported very low level of profitability. Whereas for the carry forward orders of the air pollution control, we are having normal profitability that Thermax is used to. Similarly, on the chemical business, we've had to be accounting for the entire depreciation for the new plant coming in. So these are some of the reasons where the Q4 performance would have been, even if our top line is lower, Thermax is normally used to delivering a double digits at the group level. These are the reasons for that. One more information known to all of you by a disclosure is about our agreement with Babcock & Wilcox to buy their 49% shareholding and take over the entire manufacturing facility, which in our opinion, I'll tell you the reason, the reason for it. Our last boiler capacity that we created in India was way back in 2007 at Savli. As we're looking forward to betterment of the business picking up going forward, a world-class facility which is designed by Americans, which is capable of making subcritical, supercritical, and even captive power size boilers, we felt we are able to buy it at a price very much on our favorable to our company. Because if we were to recreate something like that, it would have been substantially higher. I'm unable to be disclosing any numbers or any terms of it at this point of time because we've signed an NDA. Only when the transaction is completed, certainly we'll come back to all of you and inform you about the terms, the conditions, everything put together. But be assured that this is very favorable to Thermax Group, the final deal that we struck. Especially apart from the physical assets valuation, it also gives us the technology for supercritical, subcritical, and more importantly, the air pollution control related to NOx technology, which otherwise one would have had to buy from the very limited suppliers from the international market at a huge price. Here we'll be getting it, and the technology transfer will be for a fairly large period of time. 20 years is what we are expecting to happen. So that's one more happening. Happy to inform you that the hedge is now stabilized. We had some hitches in the Q3 and little in the beginning of Q4, but last month of Q4, the hedge band is fully stabilized, raring to go. I'm expecting that by September, October, we should be able to reach to the peak capacity of that particular factory. Factory installation at Sri City, the building is completed. The machinery is under installation. And this being a highly automated plant, I'm expecting the commercial production or trial production to start from the Q2 end of the forthcoming year. So that's about the overall performance. I leave it to all of you to be asking me specific questions which I should be able to help you answer. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Venugopal Dare from Bernstein. Please go ahead.
Hi, thanks for the opportunity. Only I just wanted to sort of understand the B&W transaction. I remember last year in one of the quarter conference call, you were more or less clear that you want to sell off the facility, and you had sort of indicated that investors should support your thought process on that. And now we're doing the reverse, where we are looking to buy out the stake of B&W. So how has the thought process changed in the entire last 12 months on this joint venture, especially given that there have been no orders that this JV has formally won from India in the last 7 to 8 years? So that's my first question.
Venu, there is no change in what I have spoken, or we are not going back on what I spoke about. The facility fundamentally is a upgraded version of what we have at Baroda. So it has got panel making capability, which is of, I would say, world-class facility. Similarly, coil making capability, header making capability. If you look at component-wise, what is over there is a very high-quality manufacturing facility with 110 acres of well-developed facility. Now, if that could be purchased at a price, including the machinery, at a price which is not thinkable, it is worthwhile. So once you know the financial numbers of the deal, possibly all of you will support me what Unni has done is right. Currently, there is no intention for us to be bidding for supercritical in India. I'm making it very clear. And if BMW were to have offshore manufacturing of that, any orders that we receive in the future, we'll continue doing that way. Currently, it is looked at as if another extension of we utilizing our facility over here. Just understand also that our facility in Pune, the main Chinchwad facility, the first plant would be almost 40 plus years of age. And the last that would have added was also maybe 20 plus years of age. And it's a 55-acre complex available in Chinchwad. So if I'm able to have a forward thinking of a modern plant, other than what Baroda we have for the long term of the company, provided the financials are okay. So that's where, that much I can disclose right now. Beyond that, I have to wait for the entire transaction to be over. Ideally, we would have sold it off and maybe taken the money in. But if we are getting it at a price which is far beyond those, it will be better. And there are some other benefits also which Thermax will be getting, because the company had been in operation for 4 years and it has got accumulated losses. So let's stop at that level and continue with the transaction. Is that okay with you?
No, I think fair will wait, but I think for me it was not really a transaction price. It was more with what you're going to do with the facility, since you seem to be clear on the usage of the facility now. So that's, I think, the main area that we would focus on, rather than whether you get it cheap or costlier. The second question only is more to do with understanding the JV losses. I think you mentioned something in the opening remarks with regards to China. I'm sorry, I couldn't really hear that. If you could just give us some understanding of Danstoker, First Energy, and absorption cooling business in China. At the same time, comment around the increase in loss in JV from associates. That would be great.
Yeah, of course I'll do that. Danstoker for the quarter reported losses, and also for the full year it has become a loss. And this is a one-off on account of 2 of the cost overruns incurred by Danstoker, and of course anticipated loss, which is already known to us, of the Polish facility which you have taken over. It is now being pollinated with marketing manpower, which is our intention to take on the Eastern European market. So those were anticipated. Even with that, it should have been a break-even plus. But there were in main Danstoker company a loss more than what we would normally have incurred. That is why Danstoker has reported a negative. Second is about China. What I mentioned is we had all of a sudden 4 cases for not really performance. Let me say that back charges equivalent coming from 4 of our customers. It is not something which is going on for, say, years together. It has only started in the last year. And this is something like a unknown thing that we operate in China from 2008 onwards. The first time we are facing this kind of a situation. And the way litigation happens in that part of the world is you will come to know about it when a judgment is passed. Unlike in India, where notice is served to you, you represent yourself in the court. Such kind of things don't happen in that part of the world. In fact, it has even gone to the extent of one of the local courts sending a account freezing notice to people under that. So those are the kind of level it can go to. And there is some amount of relationship breakage between 2 countries which can have, it's only speculation, that's why I don't want to speculate beyond a level. So wherever the claims were, the amounts of claim, amounting to around 17-18 crore, Amitabh, do you remember the total number approximately? 17.7 crore we provided on the balance sheet over there. Because its prudency demands that when there is profits available, and it is better that we provide for it rather than wait for the results to happen, though we have contested each of them. Once you contest a ruling over there, you will have a hearing available. That's in the next level upper court. Till that time, there is no hearing. Your side will never be heard. That's the way things do happen over there. I mean, there's no point in me complaining about any of that. So we have decided at this point of time not to sell anything further in China. And we are utilizing it as a manufacturing facility, which in any case is a modern facility. It's a robotic-oriented facility. And we do have orders coming from the rest of the world, and we can utilize it also. And that there is a strategic decision. We already have a old chiller factory remaining in our Pune facility. The new facility coming in Sri City. So certainly we can have two facilities, one in India and one outside India. So China, for the time being, will be utilizing it as a manufacturing facility till we settle this kind of issues. That is about China.
And the First Energy?
First Energy, there is an improvement in performance overall. After the last quarter when the oil price have started improving, we started, earlier we had 3,000 customers when the oil price was in the range of around 80 upwards. It has come down to less than 1,000 in the last year when we have taken over the balance shares of the company because the incomes really dropped. I'm happy to say that it has started increasing. Currently we are operating at 1,000 or 1,100 tons per month of pellet sales. That is, pellet is what the revenue comes from sale of pellets only. It is expected to go to around 1,400 by, if the prices were to remain the same way, upwards of $55, $60 per barrel for oil prices, then we are expecting that it should reach to a break-even level in the next 2 quarters period of time. And apart from that, we also when First Energy was operating independently as a company, they were having only customers in the commercial sector, hotel sector, and maybe hostels of the colleges equivalent. And most of them were cooking directly from the gas. Whereas we've introduced a steam-based cooking which will reduce the energy consumption by approximately 27-30%. I'm happy to say that we've been able to pick up fairly large number of orders, new contracts of the kind, where the per customer consumption of the fuel will be almost 2.5 to 3 times. So with the less number of customers will be able to serve, you'll be able to reach to a break-even level. Current year that we are operating, we should be reaching break-even of First Energy. I don't want to comment on which quarter, but looking at it, certainly we'll be ending up with a year-end at least a break-even plus, is what I'm looking forward in First Energy.
Okay, thanks a lot. I'll queue back in for some follow-ups.
Yes.
Thank you. The next question is from the line of Mayur Patel from DSP BlackRock. Please go ahead.
Hi, sir. Thanks for the opportunity.
Thanks, Mayur.
Sir, if you can just, it's always very helpful to take your comments on the sector. Given that we are still consistently seeing weakness in execution in energy and even in environment and chemicals, which are supposed to be on a good traction and supposed to be a new growth driver, there also we saw a little bit of weakness. Can you just talk a bit about outlook and what you're seeing, given that your order inflow has been very good and that gives good amount of visibility in the near term? How do you see the outlook in all these 3 segments? Just want to take your comments on that first.
Mayur, it's a 1-quarter affair. Don't get disappointed beyond the level. Last year in the initial quarter, there didn't have orders to execute. Now there are orders to execute. And we are very particular about the way we execute orders. That those are reasons which I will not disclose beyond the level. However, accelerating execution means it has to be matching up with the cash flow requirements of that also. Are you with me? So all the projects currently are going on. There is nothing that is other than some slackening which could have happened and is also caught back now. So I don't think there is any concern related to execution going forward. We are fully geared up for all the orders to be executed, both in energy and environment area. So it will be good numbers in the coming year. Next would be the cost factor in all 3 of them. There had been an increase in commodity prices in the last year. We have been able to overcome part of that, barring the ordinary IS 2026 normal steel, where we do buy spot prices. Specialty steel needed for the boiler making, any of them, we book well in advance, so we don't have any impact of the cost going up in that. So air pollution control with the environment sector of that business had an impact on that count for the year. Going forward, we've been able to increase the prices to a certain extent. See, market has not turned in any of the sectors into a seller's market. Even today, it's a buyer's market. There aren't enough and more orders for everybody to have their coffers full. So we'll have to be very cautious moving forward. If you look at the middle line of the company, despite the top line coming down, we have been able to retain, barring some expenses increase in the employee cost, which certainly we have to be having more people taken on board, looking at 45% more orders on hand. So I don't find any challenge in that count. Chemical, we had stabilized it very well, the manufacturing plant. There is no problems on the count. Current quarter, we had styrene prices going up also. The moment the crude petroleum price go up, the next impact is on the styrene price. But my resin contract, which I do take international orders, these are for minimum 1 year contracts. So I cannot overnight just because raw material price has gone up. I can demand, but they will not pay me unless I start negotiating. So with the rupee having again now gone down, it's not a great thing for India and for overall economy. I'll be very happy when it goes to 68 in my chemical business because I'm a net exporter, though styrene is important, but my price realization should improve going forward. So if you looked at it that way, only in the last quarter at the PBT level there had been a reduction after capitalizing a factory of the kind and charging off all the expenses for running the new factory, which is started off at a very low production level. As you rise up a factory of the kind, certainly there will be extra expenses, but that would all be gone once you reach a 50+% capacity. Currently is almost reaching output of 47-48% of the rated capacity. So next year, by the current year that is ongoing, by Q2 we should be reaching 70-75% of the rated capacity for the H factory. Then we'll come back to the normal profitability that we've been operating on, which you will see in the coming year. Coming year we'll certainly see that. So I don't think execution-wise one should be worried about. What one should worry about going forward, any order getting into difficulty in execution, thankfully we are clear, even the numbers that we are reporting, if you really go through the arithmetics of that, carry forward orders are after we knocking out the orders which we feel may not go through at all. So that is why the arithmetic you have to add on what are the orders which we have cancelled on our own or removed from our order carry forward. Unlike many other companies will give a gross reporting, we do a net reporting only. That's point number one. So it's quite safe. But beyond that, my challenge will be to ensure that I continue to be getting similar kind of orders in the current year so that I have the securitization of the future done. Because current year is quite securitized in terms of my orders available and the inquiries available. But further conclusion of tenders in the future, like the way we've been able to do in, say, the last 2 or 3 quarters. In the first quarter, we picked a 1,000 crore order for a refinery from Nigeria. Then we had orders coming from 2 fertilizer companies, fairly large in size, we're getting it. Another one from Gujarat getting a BTG order for a 120 megawatt kind of a BTG order. So those were all tendered where we had been successful. Now replicating that in the market in the coming year will have to happen from, first and foremost, there will be 2 steel factories coming in India with the steel companies, all of them reporting good results. So I will have to play that in the market to pick the orders for fairly large size boilers for the blast furnaces, one from JSW and second from Tata. These are the 2 which are going to be coming in the current year. Refinery expansion, though spoken about, I have not seen it as inquiries in my hand, though Engineers India Limited is ready with the inquiry. They have not cleared it so far. The moment it happens, then I have the next happening of ONG industry. And with the crude prevailing at this kind of price levels, refinery expansions abroad also are on the cards. So second half of the current year, I am looking forward to ONG, oil and gas sector also helping me to get larger orders. Captive power, all of a sudden, cement companies are also started talking about waste heat recovery, plus 1 or 2 greenfield capacity additions also. So overall, the sectors which give me the project orders selectively should help me in the current year to be at least matching up with the kind of order intake that we had last year. And if luck prevails to improve it beyond what we have done last year. That's the challenge that I've got. Execution won't be a challenge in Thermax in the current year. And we should be able to do better numbers both on top line and bottom line in the current year. Is that okay, Mayu?
No, this is helpful. I'll come back for more questions. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Kirti Jain from Sundaram Mutual Fund. Please go ahead.
Sir, on chemical, when do you see the profitability and turnover really kicking up, sir?
Profitability improvement you'll see when Q4 of last year was a Q1, there will be an improvement to start with. Here also there will be an improvement. Turnover pickup will be on two counts. Number one is the resin factory picking up, as I mentioned about, when I can start taking orders. See, resin, the way we do take international orders are not for one container, two containers. There will be multiple containers and the orders will be lasting for 1 year, 2 year, 3 year, 4 year equivalent. So we were waiting for the plant to be stabilized before we concluding contracting. It's like IT companies doing contracting. So now there are inquiries generated and they themselves come and certify the plant, and then we do a piloting. So I would expect Q3, Q4 onwards, you should be able to see resin turnover increasing, and the real improvement will be next year.
Sir, on subs level, we had seen a loss of around 10-12 crores. So when you see a turnaround in subs level, sir, or when you will see an improvement in subs level?
Current year itself, we had improved subsidiaries last year also. Current year, Dan Stoker will certainly do well. China will continue to be a pain, but I mentioned about China is being converted into a manufacturing facility rather than fully operating, including sales. Because I don't think we may be able to improve the selling in China, but I don't think it is advisable knowing the current situation prevailing over there as an Indian company. So we would utilize the manufacturing facility. Then, see, when you set up a factory in Indonesia, I never expected it to be making profit in the first year, second year, third year. As per my commitment, it has to reach up to the profitability level in the fourth year of operation. So that will continue, but it's not a big bleed. It's a build-up of a market. So you have to be investing in capacity, and the capacity in the manufacturing facility can't be 1/3 capacity going to 100% in 3-4 years. It will be full capacity, starting at a capacity utilization of 10, 20, 30, 40, rising to a 60 and above, where you become break-even and above. That's the way we are planning Indonesian facilities going ahead with. So that is it. I mean, I don't think overseas subsidiaries other than China will have a problem going forward.
So last question on the large order visibilities. This year was a year of large order visibility, like around 5 large orders we had announced in the public domain. Yes. So for FY19, what is the visibility you have, sir?
Not as many under tendering now, but there are equal numbers available at various levels of inquiry generation and discussion, budgetary level, both in the domestic and international market. I need to be admitting that I don't have a 1,000 crore inquiry right now with me at the negotiation level. I've got inquiries which are 100 to 300 crore available, which are in negotiation both in the domestic and international market. Normally, the gestation period for such large orders are anywhere from maybe a 3 to 4 months, going all the way up to 8 to 9 months. So there are possibilities that we should be able to conclude similar kind of orders in the current year also. But the overall inquiry level, even from domestic and international market for conventional medium-sized project, which is a sweet spot for Thermax, is also not bad. In fact, it's better than the last year.
Sir, on FGD, with the Babcock facility we being acquiring, will that technology we can use for FGD, sir?
We can use it, but we don't want to use it. Because Babcock technology is a little more expensive than the Marcellus technology. So, since we already have the Marcellus technology, based on which we already pre-qualified ourselves, and have started bidding in the country, and frankly speaking, the first order which ever got finalized in India for a supercritical, we were the L1, but the order couldn't be taken for various external reasons. So now we started selectively bidding for at least the electricity boards in the country who have got some balance sheet worthwhile or NTPC. These two we are getting into. See, if it is going to be a dog-eat-dog game and you're going to have a top line and no bottom line, certainly Thermax will not pick orders despite having technology. So coming back to that, we already have the Marcellus technology, which is again American origin, available to us to bid for it going forward. Whereas NOx technology which is available, it is a very rare one and good one, let me say that way. And that's why we would want to continue with the B&W technology for NOx. When Venu asked me the logic of having kept this with us, if somebody were to get a B&W equivalent technology for NOx control, it will be very rare to find because there are more than 90,000 megawatt of NOx plants running in the world using their technology. And in our discussion with the NTPC in the past 3 years where a trial needs to be conducted, we have always bid with B&W technology. And one NOx plant top line can be equivalent to maybe more than what Amitabh will pay for buying that the company itself, including the facility. So,
good to hear this, sir.
And in my understanding, nothing is going to happen for the next 2 to 3 years. The way air pollution control for power plants are going to happen in India is first the FGD, which just started moving. That train is going to start moving and get into traction level, which should happen in the next 2 to 3 year period of time. And to come about execution, NOx will start once the trials are completed in the coming next year, 1 to 2 years time. And then as the health of the electricity generating companies improve, they will be compelled to go one by one NOx control. So that time we will be one of the companies having one of the proven and best technologies available. And we have sufficiently good balance sheet to execute such complicated orders in the future. That's why it made sense for us to be looking at that resource possibility.
So lastly, any new other capex planned other than B&W, sir?
Okay, we've gone ahead with phase 2 of the Dahej factory, which will become, because we need to be having capacity created in excess of 20,000 to ensure that we will not be needing our powder facility, the old chemical factory. So that phase 2 is already there, but that's only some 50 and odd crores of rupees. It's already ongoing. Machinery is ordered for. We're waiting for the initial manufacturing to be stabilized to go for the phase 2. That's already on. Second is Indonesia. Also, the original investment is supposed to be $25 million, of which we only spent 15-16. The balance phase 2 is also ordered out, so that we are ready with the Indonesian factory in all respects also in the next 1 year. See, Thermax is very overcautious, the way we take decision. We'll go with a stage-wise and see is it really happening as we plan, then we go with the full-fledged implementation. These two are the ones which are already gone ahead with. We are looking at what is going to be the cash generation for the next 10-year period, 5-year period, and where are we going to be investing that money to have a stability for the balance sheet brought in and retained. This is what we are currently working with the board. And in my opinion, we'll be able to declare where we are going to be heading in the next 6 to 8 month period of time.
Thank you, Mr. Jain. May I request you to join the question queue for any follow-ups, as we have several participants waiting for their turn. Thank you. We have the next question from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi. Just wanted to know that how much of our order book as of now has a fixed price contract, Sunny?
Within in the area that we belong to, there is hardly anything which will get as a variable contract. Because when you sign and seal a contract of the kind that we do, any contract upwards to maybe a 10 crore, it is a fixed price only. Unless otherwise I take an order from maybe NTPC, or some state enterprises where there is a price variation clause standard available. There are some orders, very limited ones. Otherwise, most of them are fixed price contracts for us. And that had been historically true for the past, that I'm over 20 years of working in the company. It is always a fixed contract.
So, only what's your outlook on the margins now, given the commodities is not coming down? So, how are you looking your margins going forward?
First and foremost, only way to retain whatever margin one has budgeted at the time of taking the order is by placing the orders for all the commodity items which are of specialty nature within 1 month, which is something which Thermax does. Next is we have got annual rate contracts for the components that we purchase, like motors, pumps, valves, that also securitizes us by having the rate contract. Area where we cannot control is, as I mentioned earlier, about the normal steel that goes into structures, ductings, casings, which are the normal steel that we do buy from the open market, where nobody gives you a rate contract. Unfortunately, in our country, nobody does that way. So there, the price has already gone up by almost 40+% in the last 1 year. I'm not expecting it to be strengthening any further, because the minimum import price that we are supporting the steel industry with itself is already played the game, and I don't think the government is in a mood to even extend it or maybe even increase it any further. So that with that, I think whatever margins I have, as booked will be retained. improving the margin, because many a time when you take a tender, not a negotiated order, a tender, you have to quite aggressively to become L1 to take the order. In such orders, to get a double-digit margin, it can only be done by having a very strict discipline in execution, so which is something which we are quite good for. So my take is, quarter over quarter, once in a while you may have a reduction, but on an annual basis, with the kind of portfolios that we have, we should be aiming for a double-digit margin in the current year also.
Now, only coming back to your global subsidiaries, I understand, this year's loss write-off and the next year looks good because there is a write-off in the base. It's a time, I'm talking about specifically China and First Energy. Isn't it, in your opinion, it becomes more viable to shut down the China absorption cooling subsidiary, being an old facility from last 10 years, still struggling? And I just want to know what's the future of the First Energy. That was my last questions.
China, we can take the decision which you mentioned at any point of time. In any case, impairment which is needed is already almost that is taken care of. But there are hopes that that facility may help me in case of price variation, and there are some markets which may prefer. And even today, the cycle time for production in China, just to give you an example, Adani's needed 10,000 tons of chilling for their new solar facility which has come up in Gujarat. And they wanted the entire thing to be supplied exactly in 3 months period of time. There is no way with the Indian logistics one would have been able to make it in that 3-month period. I've been able to manage it only because I had a factory in China. There are global orders which you get in a short cycle. And the Chinese ecosystem is like you place an order for tubes, you get it day after tomorrow delivered to your factory. Copper tubes I'm talking about. In India, you place order, you may get it after 2 months. So short cycle order execution on larger capacity with the kind of massive capacities available in China would be a better option. So we'll have to evaluate should we be very clear about should you really want to shut it down. There's nothing as it, that factory produces world quality absorption chillers. But there are some countries where they may not accept from China, but there are many countries where they love items coming from China. So since it's not going to be a bleed beyond a level here afterwards, because earlier we were on EBITDA level we were almost closer to break even for a couple of years over there. But all of a sudden things did change, and I cannot talk on a recorded call as to what does it mean for a relationship and the Indian brand equity in that particular country. And I'm sure you should be able to imagine that. So we have to weather it.
And what's the future you see for the First Energy?
First Energy certainly will be one of the initiatives incidentally Thermax has now got into the market, which is in the annual for the past 2+ years, is we making an entry into the commercial segment. We are a B2B company. And we've seen in the last cycle, a number of cycles are faced with Thermax, but specifically between 2010-11 till last year, it is a negative cycle for the capital goods industry. So being a B2B capacity building oriented organization has taken a beating, though we're one of the rare companies who retain the balance sheet strength with no debt and still almost a double-digit profit at maybe 20% reduced top line. And these are all, I'm sure one day it will be a case study. But which is the other area that we can make a play? It is a commercial segment which had been continuing to be investing even at the down cycle. And there, we got products. At the end of the day, a hotel also buys a boiler. Not one, maybe most of them buy 2 boilers. They'll be buying water treatment plants. They'll have a requirement of a sewage treatment plant. These days, many of them are looking at solar as an option. So, the products which are currently sold by Thermax for the industry, with minor tweaking and with a high level of automation, but not so highly performance-oriented or not so efficient. They don't need such efficiency. Are saleable to the commercial segment, to the malls. So there we want to be a player. That is the purpose of we looking at First Energy as an investment level. Unfortunately, it is a mistimed investment. Because their entire thing is on fuel shift. Means somebody who's buying LPG cylinder in maybe a college hostel or in a restaurant or a Sodexo cooking place who would be paying maybe 600-700 rupees, or I don't remember the value of each of the LPG cylinders. There is a 20% cost arbitrage by going for a gasified cooking from the wooden pellets. And so the entire gasifier or the cooker was supplied as an item without any capital payment. It's like on a lease given to the kitchen. And on a monthly consumption base, they were paying. That is the way First Energy is configured. Now, as crude prices came down from 70, 80, 90, 110 to $25, $27, LPG price also crashed in the country. And in that one, many of my customers shifted back to LPG. Now, it's ill time, let me say that. And unfortunately or fortunately, either way, the existing players also, the chaps who were the shareholders, had to give to Thermax their balance shares up to 76% at a very, 1 rupee price equivalent. So we took over that. We also issued preference shares to support that company. Today they have got cash on hand available. And we have seen the reversal started happening with the crude prices having tempered back to 60, 70. I don't expect, the world doesn't expect it to come back less than 50. And I only need a 4-year play available for it to come back to the normalcy. And in the meantime, with our knowledge and capability, as I mentioned about, if you've got an open stove cooking, the way their gas cooking is, versus if you were to go for an indirect heating using steam-based cooking for larger, kitchens, you can certainly have overall fuel consumption reduced by 27-28%. So with that also introduced, we just tried it out after we buying the balance shares. And I'm very happy to say I've got 100 inquiries on hand right now. At least 10 of them are converted into, by which only my entire pellet sales have gone up by almost 30% now. And I'm expecting it to reach to a break-even level of 1,400 to 1,500 tons per month of sale of pellets will be break-even for the company, which I'll reach in the current year. Now, once it reaches over there, I have an access to all this commercial establishments. 3,000 was the peak number of customers which I'm talking about is 24 months back. If I'm able to catch back to the 3,000 customer access for my rest of the products of the company, certainly the investment plus will pay back. That will be a vehicle used by the company for commercial market entry of various products of the company. That is it. So there is a strategy behind all of this, Nathan. But, it's the wrong time entry. Imagine that if I were to be entering today, I wouldn't have paid this kind of a price to buy the company to start with. And in any case, we would have been talking about how things have improved after we buy. So whereas in the other case, we bought, things went wrong, but we're not going back on that. See, there are areas, like the way somebody asked me, China, can you not close it down? Knee-jerk reactions is not what we should do, because if you thought about a strategy, you certainly will face, headwinds. Now, you are going to measure the headwinds. Is it permanent death or is it a disease which is caught which can be cured? So my way of thinking is that if your strategy was right to enter, stay put, so long as you can afford it. And certainly it will pay in the long term. That's the way we are looking at it right now.
Thank you, Nick. Thanks a lot.
Thank you, Nitin.
Thank you. The next question is from the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Sir, thanks for taking my question.
Yes, Ravi.
You had seen quite a few orders from the PSU side last year, that is FY18. So are there few more orders which are there from the fertilizer or chemical or any other sector which is there? That is question number one. And from the private side, you had mentioned JSW, Tata Steel. What is the potential size of these orders, and will it have a cascading effect on the smaller steel, billet plants, etc., which will lead to order flow for you over the next 1 to 2 years?
First and foremost, fertilizer, there may be one more in the immediate future. And IFCO is still vacillating should they go ahead with that. So that's something which you'll have to wait for. The second one can happen. One would happen in the current year. Not for me, or that will be decided later only, but certainly. And next, to talk about steel, yes, both this project which I mentioned about, JSW is already ordering. I think they have almost completed the ordering for most of the steel plant to China. 78% they give to China. And blast furnace-based power generation items are under negotiation right now. So once that is through, we are one of the major players in that area. So In any case, in blast furnace firing, gas firing, we are the number one in the country in both in technology, capability, everything put together. So I stand a better chance to be concluding that. Terra Steel were to be concluding the order in the H1 of the current year, but their attention got diverted to Bhushan Steel. So since the deal is through, we need to really wait for what are their plans related to Kalinganagar expansion. Will it happen in the current year or will it get into the next year? So those are things which we cannot predict right now. Now, Ravi, the next question about the downstreaming impact of that related to the feed supply of sponge iron, Thermax will certainly be getting benefited. We already got some orders in the last year. There are inquiries happening. And for the part, we'll wait and watch anything on that count. See, there is no turnaround in investment cycle in the country for the larger commodity sectors. But there are hopes that it may happen going forward because, say, like cement plants. I continue talking for the past 2-3 years. I hope all of you will remember that I told that all cement companies are having excellent balance sheet, highly non-leveraged balance sheet with a lot of cash available. So once capacity utilization crosses certain percentage, I always told 85%. But I am seeing people who cross 75 also today started looking at greenfield expansion. And there are not too many consolidation possibilities remaining over here. That's why you would have read in today's newspaper about the largest Indian cement maker buying his own company, group company to consolidate further. That means there's nothing available in the market any further. So greenfield capacities will have to happen. So I'm hoping that sector-wise turnarounds are going to happen. The way things are happening in the country related to, steel production, non-ferrous metallurgy has got to follow. Not a single aluminium smelter or a factory got commissioned after Aditya Birla Group's, 2 of them which got commissioned 2 years back. Of course, I had at least some orders to come from there. Going forward, I'm sure about that. See, the consumption of metal is, there is an equation available. Normally, steel companies will lead, and then comes copper and aluminium. So there will be something more to happen in the next year, 2 years. So my expectation is there will be selective investment happening in the core sectors, barring one, that is the power sector, for the next 2 to 3 year period of time. So I should have some positive coming from each one of this. So current year's expectation that I have is the steel, one at least I should be. Fertilizer of the 2, I should be able to pick up. Because I had been successful last year, so I should continue with my success.
And how large would that kind of potential order be? So at least if you can give a broad range, it will be helpful.
Like whatever had happened in the past, you've seen the numbers, no?
Okay.
Yeah.
And how intensity of steel, aluminium and copper? So basically, aluminium, will it go for larger IPP range plants, or how do you see that?
The aluminium, if they have to go for, they are almost like, if you look at Balco, they have got 8 numbers, 135 megawatts. Hindalco has got similarly 150 megawatt into a couple of numbers. So they are guzzlers of electricity. So it will be fairly large, medium size. Say up to 200, 300 megawatt in multiple numbers is normally what they go for.
Got. And with the rise in crude oil prices, do you see any further ordering opportunity from Middle East and Africa? So basically... There are... Africa, I may not bet right now because this refinery has got to be commissioned before another one to happen in Africa. Middle East, certainly there will be investment happening. Because they don't have any other option right now, but only raw material available to them very cheap is crude petroleum. And only value addition they can do is by refining that. And of course, they can go for petrochemicals also. So that's only area where we look forward to. And, one thing which you should have noticed is in the last maybe 2 or 3 years, a movement which is happening across the globe is to have gas as a feed fuel for captive power wherever it is available. And that's an area where we really focus because we didn't have any capability to be building gas-based captive power plant. We started off with that with one is OMPL. It's a ONGC joint venture. We commissioned the plant a year and a half back. Based on which we got pre-qualification, we got the RCF order and NFL order. Then for open cycle to be converted into combined cycle, we've gone and picked up the order from Northeastern
Park company, NEEPCO, which also commissioned. So with that, today I've got pre-qualification and capability both. One is PQ, second is capability to satisfactorily execute captive power plant based on gas, which is a rare thing. Not everybody in the country has got all. None of my competitors, barring maybe BHEL, may have that kind of a capability. Even in BHEL's case, they may not be very competitive and nimble and quick in terms of turning around. So this is an area where shift is happening in the global market. See, I am expecting that many coal-based existing captive power plants in advanced economies where they can afford it may shift to gas if gas is going to be available. So in that, I want to be ready because with the qualification I already got, up to 100 megawatt captive power plant for gas-fired, I'm pre-qualified to do that. In any case, I make the heat recovery steam generator. I'm sure both the companies who are making gas turbines in the world are aware of Thermax's capability, and both the companies are averse to doing EPC. I'm happy to do EPC of this particular size. So I've done it also. So I'm expecting that this should give me an impetus. The same way we did qualified captive power plants in India, then moved into the rest of the world, I mean in Southeast Asia and Africa, in the last maybe 6-7 years' time, I should be able to make a move, go at it in terms of captive power based on gas. I may not attempt to do that in the developed world, but developing world certainly will be a major player in that one.
Thank you. Mr. Swaminathan, may I request you to join the question queue for any follow-ups, as we have several participants waiting for their turn. Also, participant, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. If time permits, you may join back to the question queue for any follow-up. Thank you. The next question is from the line of Salil Desai from Premji Invest. Please go ahead.
Thank you. So this is, just clarification on your chemicals business. So you're saying that raw material cost hits you immediately, but the pass-through in the finished product price takes time, and you have to negotiate with your customer to do that. So what is the time frame that you're looking for in terms of the lag between the cost hike and the price?
Most of the contracts will have the fixed price portion only for the current year contract. So whenever the year of that ends, next year automatically I can get an increase. So imagine that if the contract is only having 1 more month remaining for renegotiation, it's only 1 month. But if the contract is just entered within 3 months' time, if the cost were to go up, then 9 months I could wait for. But in the resin sales, this kind of medium to long-term contracts are only, I would say, 40 to 50% of my total output. The balance is the retail sales, where I can increase. But there the competition will have to be considered, because how fast, it's something like when, auto industry, who is the first one to increase the car price when the steel price has gone up? It's only the highest of the brand. Mercedes can afford to do that. Smaller companies, Hyundai will not be able to do that. So I am not a large player. So I've got to be waiting for a Lanxess or maybe Dow Chemicals to be increasing the prices. Then immediately I jump. That's the way it has to be looked at.
So then on a, say, if assume that on average it takes 6 months for any contract to come up for renewal, then how do you manage, in the sense that as when you think of a business plan, then is there a way you can hedge your risks of commodities spiking up or not, or you just have to go with how the market behaves?
No, there are some forward contracts of styrene also possible to set next year. That we are already a part of that, not on our own. We may have to do it because we are not buying in bulk of that kind. So we do a bundle buying along with the major buyers, adding our quantity along with them. So that will protect us to a certain extent. But otherwise, it's only a cost already considered to a certain extent. Otherwise we would have plunged into loss. That doesn't happen that way. This increase has been very steep in the recent past. See, a normal increase beginning of the year to end of the year, if there is an increase of maybe 10%, if the shock absorber is already available, you're back on paying. But if an increase would happen by 40% from beginning of the year to end of the year, certainly I'm in back league, because that shock absorber is incapable of taking that kind of a shock. So that padding is already done in the pricing, which is good enough for it in the normal circumstances. Whenever a spike happens of this kind, which I think is we are already almost through, unless otherwise there is another prediction which, like the last cycle people spoke about, crude will reach $200 a barrel. Well, if something like that were to happen, then all of us are going to be in pain for some more time. Then, of course, we may have to renew on contract. Nobody would do including my large competitors, will never do any business on loss-making. Then you foreclose, pre-close contracts. That could happen. I am not expecting something like that to happen. I think crude petroleum is going to be range-bound within maybe a 10 to 15% in the current year, is my belief. If that be the case, we have sufficiently covered.
Thank you. Ladies and gentlemen, due to paucity of time, all participants are requested to limit their question to one per participant. Thank you. The next question is on the line of Aditya Bhartiya from Investec. Please go ahead.
Yes.
Hi, good afternoon, sir.
Yes, Aditya. Good.
So my question again is on margin sensitivity to raw material prices. Specifically, I wanted to understand for longer execution orders, like let's say something like Dangote, are we completely covered from raw material cost fluctuations? And also, while you mentioned that rupee depreciation helps the chemicals business, how does it exactly impact other businesses?
Aditya, Dangote, thankfully, our ordering is over by almost 90+%. It's only the large nuts and bolts which are the last moment ordering, which are not going to be impacting. Those are C or D category items in the entire cost structure to be ordered. So that's already covered. Nothing to worry on that count. And any imported component on that with the Indian rupee diluting also, it's all with forward cover taken care of. So there are no worries on Dangote order. Similarly, on any large project orders that we do get, we already place the order for all the major components and the raw materials, barring the conventional steel, preferably within 30 days. In fact, the alloy steel and all, we place order on the day when we conclude the contract with the customer, and advance is received. Same night, our purchase order will be sent by wire to our suppliers. So that advance actions we do take. And some amount of bulk buying also in anticipation of the, shortage of tubes has also taken place. So that way we are fairly well covered for majority of the larger orders on hand. But there are times when if the supplier is from China, I want to be honest about that. Even after having an LC open, he can go back on the commitment. Those kind of things will have to be managed. Otherwise, we are quite nimble and very agile to ensure that cost coverage is done very quickly. And they are reviewed also at very senior level, including Amitabh getting into a review of our cost structure of that's taken care of. And then chemical, as I answered to you, in the chemical business, don't get carried away beyond the level by what I spoke about, because 50% of my sale is resin, balance 50% is performance chemicals and construction chemicals. There, this tyrant impact won't be there. So half of what is there is what one has to worry about. The current quarter that you've seen is because I've been continuing to be running our Powd or Maharashtra factory and the new factory at Dahej. So expenses are virtually when you commission a plant, all the manpower has got to be there to run the plant. I can't now say maybe one-third of the human beings, operators and managers being present to run a one-third capacity. So the overheads related to running the entire Dahej factory is incurred. So as the capacity picks up to the full level of 60% level, which I'm anticipating to happen by end of Q1, beginning Q2, it will also turn around. That is only the current reason. Otherwise, there is, and styrene, of course, has an impact, which I did mention already.
Thank you.
Yeah.
The next question is on the line of Sujit Jain from ASK Investment Managers. Please go ahead.
Good afternoon, Unni. My question is that in the B&W JV, was there a put option to B&W?
No, we didn't have a put option.
They did have? Did they have?
No.
Okay, and one question, if I may, is that in the wake of MNCs putting up microgrids in their own captive factories in India and then demonstrating to their customers, what is the threat to captive power business in the long run?
See, if India were to have created much larger capacity of generation than what we have, captive power would have been in threat and will be in threat. Some numbers are to be understood. I don't know how to translate that. China at this point of time has got a little over 1.1 million megawatt installed capacity. Our country, with all surplus power being touted for almost a similar size of population, is 3.4 lakh or 340,000 megawatt. Now, we want to be an economy as good as at least China someday. So the gap of power is so high. how can you, companies depend upon power coming from the wire? My understanding is that, fortunately or unfortunately in India, genset and captive power based on solid fuel will continue to be remaining for a considerable period of time. Once when we have a per capita availability of electricity in the country touching a 3,500 to 4,000 units of electricity per person per year, we may say that captive power can take a negative dive. India's number is just about touching, the last number I heard was 1,000, but the population is increasing by the day. So now per capita, how much has it become? It may be lower than 1,000. China, for information, is touching 4,000. So that's a kind of power requirement going to be emerging. As affluence catches on in India, cost of power will become not an impacting factor for sale of power. Even today, when we say there is surplus power or maybe people aren't buying, fundamentally, you go to the rural areas in the peak of the summer, there will be power cuts. Not for half an hour. Half an hour and 1 hour is for Bombay and Pune and maybe Delhi and cities. The rural India will not have power for the day. Because what they pay is something like maybe 1.5 rupees, if at all if they pay. And the purchase cost of electricity is already, you guys know it better than me, ranging between 4 rupees to maybe peak hours, they'll charge even 8 to 9 rupees. So it is not possible for any electricity board to supply at a subsidized rate to the rural area. As the rural economy picks up better and their payability, like if somebody who can afford to be using a mobile phone and pay maybe 300 rupees for the mobile charges, he will be willing to pay 300-400 rupees for electricity and have at least a fan running and in a shade to remain in the daytime. So that is the way things have to be looked into. We've answered this question a number of times. Somewhere, our growth rate as of today, that is where one has to be literally understanding. With all, touting of various things happening, in the last 4 years, which part of the Indian economy has grown? It's the service industry. Service industry doesn't consume electricity. If you believe that India is going to be Singapore all through, that is service economy all together, or what Britain is trying to become, 100% service economy, then it will be bypassing the entire manufacturing. Because as I understand, in economic development of countries, or civilization to be precise, agro-economies become manufacturing economies to service economy. Okay? We are yet to be building, our agro-economy may shift. I think it is almost reached a peak. Only mechanization is going to happen over there. And manufacturing economy is yet to be picking up in the country. And then we will move to service economy. So if manufacturing were to be picking up, has to pick up one day. Otherwise, there will be so much unemployment in the country, I don't know how will we be able to run this country. The kind of chaos that will be prevailing over there. So we are going to be forced to encourage manufacturing in the country. As the manufacturing picks up, per capita electricity consumption go up. So I am very confident about it. Because I am giving you a philosophical answer is that many a times we got the suspicion will captive power survive in India. It is going to survive for a considerable period of time till such time we reach this kind of power availability in the country. And I don't think solar is an answer for it all of a sudden. Though solar will grow in the country, wind will grow in the country, and I'm sorry to say coal will restart in the country. Whether we will sell supercritical that time, it's a decision that we'll be taking. We'll have technology, we'll have a factory. We may still opt not to be doing that. Is that okay, Sujit?
Yeah, thank you. Yeah. The next question is from the line of Renu Beth from IIFL. Please go ahead.
Yeah, hi, good afternoon, sir.
Hi, Renu.
Hi, so just 2 questions from my end. You mentioned that the current backlog for the year-end includes some projects which have been cancelled. So if you can briefly elaborate on that, and Amitabh, if you can also share with respect to details on order intake and order backlog for Energy Enviro. And my second question is, you did mention of a much healthier backlog and execution momentum sustaining. So does that give us confidence that, despite missing revenues last quarter and the last year, this year we should be closer to the 20% kind of growth rate, given the strong backlog with us on the EPC side?
Yeah. First and foremost, maybe I misspelled it or you didn't hear me properly. One of this has happened, I don't remember. That what I told is that in the statement related to the carry forward orders is after considering orders which may not move. That is why I spoke about the arithmetic. Opening orders of last year, plus the new orders received, minus the revenues, exact may not be matching. That is after adjusting if there is any order which would not move. Insignificant. That is the very, Amitabh says insignificant. So I'm handing it over to him to give you the numbers of energy, environment. Chemical normally doesn't have too much of carry forward, but Amitabh, you can give Renu the numbers. Yeah.
Renu, the consolidated level, the order intake for the quarter, energy is 1349, Enviro 161, Chemical 88, total 1599, and order balance is energy 5042, Enviro 612, Chemical 34, total 5689.
Okay.
Thank you.
Renu, the number let me give you. If I opened the last year with 3,976 crore carry forward for the group. We booked 6,380 new orders. We executed 4,391, leaving the number should have been 5,965. Our second that we are reporting a number of 5,689, which means the order which are cleaned, not cancelled. Let me clarify to you. Is 276 crores of carry forward orders are the cleansing done by Amitabh and team. After going through each order, is it moving or not moving? So that's the number. Now, second thing that you wanted to ask is about growth. If you do arithmetic, whatever you ask may be very close to reality. Now, as we move, be assured of the fact that my factories are waiting for this kind of orders. So all of them are now doing quite well. Customers, most of the customers, the numbers which we are reporting none of them are having any NCLT or maybe CDR difficulties, the orders which are there with us. So it should move. See, sometimes what happens is customers will, when I say delay the project in our kind of orders is by a couple of months only. Not that, they may not want to take a depreciation a particular quarter. They say go slow for so all the orders are executable, which are reported over here. So should be able to manage it, Baba.
Thank you. Participants are requested to limit their question to one per participant. We have the next question from the line of Ranjit Shivram from ICICI Securities. Please go ahead.
Yeah, hi sir. In the previous question you gave the consolidated breakup. So can you help us with the standalone breakup of order intake and order book?
Standalone energy 1231.
Yeah.
Enviro is 161 and chemical is 80, total 1473, and order balance energy 4659, Enviro 612, chemical 31, total 5302.
Thank you. The next question is from the line of Nilesh Bhaiya from Macquarie. Please go ahead.
Yeah, hi, this is Inder here from Macquarie. Thanks for the opportunity. Only you talked about opportunities potentially coming in from steel and cement for the captive orders. What do you think about competition in that segment? Is there a likelihood that some of the other established players in the BTG segment starts to also participate in this low-end segment, given that the utility in BTG order is not available in the market? And have you seen that happening in any of the bids right now, and what is it doing to the pricing? Thank you.
Yeah. There are only two established players, or 2.5, let me say, of the supercritical range in the country. One is the public sector company, and the one is a private sector joint venture. The public sector company is always there for the past, maybe I am seeing it for the past 3 years, they are participating in most of the smaller capacity, but they have not come down to a 20-25 megawatt. They normally, once in a while they'll put a bid for that also, but they are unable to pull it through. I have not lost a single order to them in the recent past that I can think of up to maybe 100 megawatt size, either in oil or... gas is something which they do, especially since they have designs of GE available with them for gas turbines of smaller capacity. They bid but they've not been able to be successful because, after all, plant engineering for an oil and gas-based, oil-based or gas-based captive power plant is something which we have now understood very well, and we are able to optimize on that. Not that they can catch up, but not seen so far. The other joint venture of the domestic private sector company, I don't think they have come to compete with us because they're very busy with very large contracts. These are very small in size. I'm not expecting them to be coming in. But the other are regular competitors in the coal-fired or solid fuel-fired, biomass-fired area. Two of the main competitors, that is, one of them is trying their level best to getting into that. Will they make an entry? Can make an entry. I will not write off any competition from that. But we have an advantage of having completed multiple projects and the knowledge gained out of that. But are they able to kill the price and maybe kill the margins? Certainly, may be able to. So we can't have a free run available to make great margin. We'll have to ensure that we are able to get decent enough margins by executing on time and without having cost overruns. That's the only way to manage it. Next thing to do is using the experience and the registration to move into the global market in the developing world and possibly make a go at it in the European market one day, not immediately, because we got to have the capability to be managing the European standards of engineering for a project of the kind to execute locally, which I would say that will take time to reach over there. Products we are capable, but projects we'll have to have partnerships to do that. That's it, Nilesh.
Thank you. The next question is on the line of Bhavin Vithlani from Axis Capital. Please go ahead.
Yeah, thank you for the opportunity. Only two questions quickly.
Yeah.
On chemicals, you mentioned that you are going ahead with the phase 2 expansion. So could you now give us what is the capacity now, the utilization now, and what is the investment you're expecting for the new phase and when would that be complete? And what gives you the confidence of expansion into next phase? That will be helpful. The second question that I have is on the balance sheet that I see that your working capital levels have been going up, especially when I look at your debtors are up by 20%. We also see a commensurate increase in the liability side. But could you give us some color on the working capital? These are my two questions. Thank you.
First is about we have a 10,000 metric cube per annum capacity existing at our old factory in Maharashtra. And the new one which we commissioned, the Dahej, is 12,000 metric cube per annum, which means 1,000 metric cube per month. It has reached up to around 500 metric cube per month in the Dahej right now. My demand for the year next year, FY20, is going to be between 18 to 19,000 metric cube per annum. So once the Dahej plant reaches 12,000, I still need to be running the Maharashtra capacity old facility to take care of my FY20 demand also, unless otherwise I have the phase 2, which means additional 10,000 meter cube to be added at the Dahej. So the Dahej phase 2 is at 10,000 meter cube. So phase 1 is 12,000, phase 2 is 10,000. But for the initial plant itself, we have gone for all the common facilities, utilities and everything is already designed and executed for 22,000, because of which at an expense of only 60 crores rupees we'll be able to complete the phase 2, which is ordered out. And I'm expecting that we commission ideally by December, but let's say that normally chemical plant commission can get delayed a little more. Come what may, June 2019, that will be up and going, which will possibly liberate my full capacity in Maharashtra. And we'll take that's an independent chemical factory with 70 acres of land. What do we do with that? Let me not declare, but there are thought process in our mind what we need to do with that. And the second is, Amitabh, he wanted some clarity related to that. Okay.
I think, Bhavin, on the receivable side, whatever is the increase you were seeing, a little more than half of it is relating to two particular contracts where the receivable increase, which is secured receivable, has been extended for a particular contract or for two contracts. And the increase in liabilities, what you were saying is that, advances from customers have gone up significantly. So these are the two factors which have contributed to the two aspects you inquired.
Is that okay, Bhavin?
Thank you, sir. The next question is from the line of Ankur Sharma from Motilal Oswal Securities. Please go ahead.
Yeah, hi. This question was for Amitava, actually. Sir, could you please share the standalone segmental sales and EBIT numbers if you have it on you? We typically give it on our annual, the press releases. So if you could please share that for the full year, FY18.
Okay. Energy environment segmental.
Yes, please, for the full year.
Yeah, he is giving you. So, I think, Ankur, we are not giving the standalone segmental separately, and this is now almost last 6 quarters. We haven't given that. But I can give you the standalone revenue. Energy segment revenue for the, you want for the quarter?
For the full year, sir, preferably.
For the full year is 931. Environment segment is 640. Pardon, sorry. Environment segment is 636 and chemical is 326. Total 3,889. There will be certain ether segment revenue.
Okay. And the EBIT numbers would not be available at this point, right, sir? I mean,
I thought, no, we are not sharing the EBIT number for the last quarter.
Understood. Got that. Not a problem, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Thank you. Thank you, Ankur and team also. I'm sure there would have been a feel of, I would say, disappointment in all of you related to the Q4 performance. Take it as one quarter, but look at the positives related to the carry forward, and we should be able to pull through a good year in the current year. As I mentioned earlier, execution is a challenge, but it's not such a challenge for Thermax. We've done much, much better. We managed a much bigger carry forward. We only automated better, and systems are far superior. And the overall ecosystem is also in a better condition in the country in comparison to the great days when we did maybe 6,000 crore turnover some time back. What India was that in 2011 versus today ecosystem is far superior. So I don't think there should be a worry related to that. Margins certainly will depend upon if there is any substantial change in anything. And in any case, most of the raw material prices are covered. Labor charge increase can have an impact not only for me, for everybody in the country. And if the populistic move were to be made by the current government of making minimum wages something like skyrocketed level, then there could be some impact, but those are all manageable. There's nothing that is worrisome for us at this point of time. What we are working on is, my team is working on executing orders, and me and other set of people are currently working on how do we ensure that order booking can be sustained or improved in the current year. Looking forward to continued support and advice. Thanks a lot once again for having interest and being with us all this while. Thank you.